Yo, what up, boys? We're here on the trade recap. Wednesday price action 15/04/2026, April month. We took a W. We took a win. My first trade hitting some insane risk reward ratio. It was a 103.57 risk reward ratio. First time hitting an insane trade. So let's go after it. So coming on the market, we have the market open up right here Wednesday 9:30. So coming on the day, 1 hour time frame. Like the 4 hour time frame, it's obvious bullish structure, a lot of unfilled 4 hour gaps, but the trend is going higher. And I'm not trading against the trend. And if I lost to a rebalance price action, that's my fault. I should have known better. So coming on this day, 1 hour time frame, what do we have? 4 hour, nothing. 1 hour time frame. 1 hour time frame on NQ, we have this bullish 1 hour gap that we already retraced and showed rejection, but market out. On ES, we don't have that 1 hour time frame. It was weekly price action, so no 1 hour time frame gap. 15-minute time frame, we have on both indices, Nasdaq and ES, we have that bullish 15-minute gap right here before market open at 9:30. So coming out this day, it was dependent on this 15-minute gap and the 1 hour gap on NQ, and we've had some data highs pre-market. These two bumps up, this one and this one. We've had an S&P pre-market, which is Nasdaq and like ES came up, took out this data high and left another data high, while Nasdaq came up and didn't take out this data high left by Asia session. So my bias for the day was we market open and give me Judah Sling, like sponsored by this 15-minute or this 1 hour, and boom to the data highs. Unfortunately, that was not the case. Market open and we straight rally to the data highs and then go back visit that 15-minute. So let me show you on the 5-minute time frame. So 5-minute, as you can see, market open, we go straight to the data highs, no entry, no rebalance to take those data highs on both indices, no entry point for my draw on liquidity. So when we took this, I'm waiting for a key level to get hit or a continuation model for longs. And the thing that gave me a bias is hitting my key level, which was this 15-minute or the 1 hour or the 15-minute on both indices. Like Nasdaq, we came down to the 15-minute again after taking data highs. We retraced back into the 15-minute, didn't take out this internal low inside this SMC, but on ES we came down, revisit the 15-minute and take out that internal low. What is this screaming? It's screaming SMT divergence. Yeah, we put up an SMT divergence. Who's the leading to the upside is Nasdaq. So SMT divergence inside the fair value gap. This is screaming longs if it hold off. And I see this hold off, boom. But I was looking for a continuation model, like sponsored by 5-minute or 15-minute, like a retrace back into a 5-minute, 15-minute gap and then take longs. But no, it was a weaker price action. We didn't left any 5-minute or 15-minute gap to enter. It was weaker price action. So when I sell this, I want entry. I want to trade this day. I want to entry on this. So I see that Nasdaq maintain bullish structure while ES still playing inside this 5-minute gap, while Nasdaq already closed above this high and this place on higher. So what I wanted is to see the correlation here between the two assets, like I did on this week, maybe. Yes, it was on Monday. I did a fault, which is I took a trade when both indices were not correlating, and I ended up taking a loss. But I didn't wanna remake the same mistake, so I waited for ES to maintain bullish structure by what? By inversing this 5-minute bearish gap. And when I see ES inversing the 5-minute bearish gap, this is screaming bullish for ES, and Nasdaq is already bullish. I just decided to enter right here on this a little candle right here, entered, getting filled right around here, stop loss on the last 5 minute low, take profit. For the take profit today was something really hard because as you can see we're close to all-time highs, and on that time when I was in the trade, the take profit that I had in my mind is this point, like the end of this 4 hour gap, because we were playing inside this 4 hour bearish gap. Take profit was inside this the end of this bearish 4 hour gap, but then I decided to extend my take profit to this 1 hour high above the 4 hour gap. So 1 hour high right here, 4 hour gap, extended my take profit. Entry was not based off a continuation model, just waited for the correlation between the two assets to get in play until stop loss on the last low. Take profit got hit. My most risk reward ratio trade 103.54, and I'm really thankful for this day because I was on the verge on blowing my eval. As you can see, I was on the verge of blowing my eval. If I lost this trade, I would have one trade left to blow the eval. So this win, this huge win, was on point, and now I'm back at break even at the eval. I'm back from drawdown and I'm back at break even. Insane trade, insane idea. Not A plus because it was not sponsored by 5 minute or 15 minute fill, but this played out. I mean, ultimate distribution until New York last session made us the retrace into the 15 minute, 5 minute, and the New York PM continues higher, and now we are at all-time highs. And yay, that was trade recap. Really happy day for me, really good day for me, insane trade for me. Not A plus setup, we can call it a B plus setup. And yeah, boys, trade safe, take care of yourself. Hopefully we stay on this winning streak tomorrow. Hopefully we take a win tomorrow and a win on Friday to end the week on half passing the eval. Why not? So trade safe, boys. Patience pay, and patience pay. I mean, until I figured out like how to trade the evals, I was like scalping moves. Now I'm sticking to one trade a day. Maybe if I got on the first trade break even, I'm entering the second trade, and that's it for me, boys. Trade safe, good idea, good trade, and yay. See you another trade recap. Peace out.